A Canadian entrepreneur started a business during the pandemic. It succeeded. He makes products, employs people, pays taxes, and he's still not as wealthy as he would have been if he'd just bought 2 houses instead. That's not a personal failure. That's a national one. Canada has the highest residential investment rate of any advanced economy in the world. More capital flows into housing than into machinery, equipment, or intellectual property. Not by a small margin, by a significant one. Here's what that means in practical terms. When a country invests in equipment, technology, and research, productivity rises. When productivity rises, businesses produce more per worker. When businesses produce more, they pay higher wages. When wages rise, the standard of living improves for everyone. That's how healthy economies grow. More output per person, higher wages, better quality of life across the board. Canada chose a different path. We invested in houses. For a while it looked like it was working. Home values climbed. Homeowners felt richer. Banks lent more. Construction boomed. But underneath all of that, the productive economy was hollowing out. Between 2000 and 2025, Canada's GDP per capita sat around $55,000. The United States hit $95,000 and climbing. That's a $40,000 gap per person, and it's been widening for over a decade. The housing obsession created a self-reinforcing cycle. Home prices went up, so people bought more homes to capture the gains. Banks lent aggressively because housing was seen as safe collateral. The government incentivized home ownership through first-time buyer programs, tax-free capital gains on primary residences, low-rate policies, and immigration targets that increased housing demand. Developers shifted from commercial and industrial projects to residential because the returns were faster and more certain. And because housing kept going up, nobody invested in anything else. Think about it from the perspective of someone with $500,000 in capital. You could invest in a friend's startup that might fail and take years to return your money. Or you could buy a rental property in Toronto that appreciated 20% in 2 years with a mortgage that magnified your returns through leverage. The rational choice was always housing. Millions of Canadians made that choice simultaneously. The result is a country with a shortage of entrepreneurs. Those who do start businesses struggle to raise capital because Canadian investors prefer real estate. Venture capital per capita in Canada is a fraction of the United States. Some founders leave Canada entirely because they can't find investors willing to back technology, manufacturing, or services when real estate offers easier returns. The entrepreneur who started his pandemic business said it clearly. The overall drag on economic activity when buying, holding, and rent-seeking on unproductive assets like housing represents a better investment than building something new is enormous. He built a successful company, and he would still be richer if he'd just bought property instead. The housing economy has physical consequences too. A significant proportion of Canada's housing stock is falling into disrepair. Homeowners who stretched to buy can't afford preventive maintenance. Roofs leak. Owners patch instead of replacing. Then the leak gets worse. Mold develops. Ceilings sag. Building materials getting more expensive. Labor costs climbing. Canadian winters with freeze and thaw cycles punishing on deferred maintenance. The housing stock that Canada spent decades inflating in value is quietly deteriorating in quality. Then there's the demographic crisis. Canada's birth rate fell below the replacement rate. Young Canadians can't afford families when a one-bedroom condo costs $600,000 and childcare runs over $1,000 a month. For years, the government masked this by increasing immigration. Record numbers of newcomers propped up population growth, which propped up housing demand, which propped up the entire economic model. But in 2025, Canada's population actually shrank for the first time in decades. Immigration is now politically difficult to expand. The population scheme that sustained the housing economy is breaking down. Meanwhile, the people who benefited most from the boom need the least help. Seniors and older homeowners who bought decades ago sit on properties worth 5 to 10 times what they paid. Many use home equity lines of credit to fund retirement spending. They vote against supply-oriented policies like zoning reform and densification because new construction could lower their property values. This creates a generational standoff. Older Canadians protecting accumulated housing wealth, younger Canadians unable to afford homes at all. A government caught in the middle, unwilling to let prices fall because the economy depends on them staying high. One commenter on a viral Reddit thread captured the mood perfectly. Nobody has money, people have things, real estate, a business, a car, stocks, but nobody has money they can actually spend. The restaurant can't pay staff more because customers can't afford to eat out. Customers can't eat out because the mortgage takes everything. Everyone is stuck, the economy is frozen. At the center of that freeze is a housing market that extracted all the oxygen from everything else. Some point to Singapore as a model. No additional tax on a first property, 10% on a second, 15% on a third. This prevents speculation and hoarding, keeps housing primarily for living, not investing. Canada could implement something similar, but it would require political courage that hasn't existed here in decades. Every homeowner who votes is incentivized to keep prices high, and homeowners vote at higher rates than renters. The fix is a 50-year project. It starts with allowing housing prices to gradually normalize, redirecting capital toward productive industries through better tax incentives for business investment, cutting development charges that inflate new home prices by $100,000 or more per unit, and accepting a fundamental truth. A healthy economy cannot be built on the assumption that a house is the best investment a citizen can make. Do you think housing should keep being Canada's biggest investment, or is it time for something different? Drop your take in the comments.